Hey everybody, welcome to the Trading with Ashley show. So I wanted to do this little pre-video before the video I'm about to show you, which is great. I think you're going to love it for two reasons. One, I could not get the color correct. There's a new way that I was filming and I could not correct the color. So forgive it's overexposed or something. Forgive me for that. But the other reason is I wanted to make sure that you are aware that we have 3 weeks left in the $25,000 challenge. And I've had a lot of members join because of the challenge, because they want to see how far we can get $25,000, which is a pretty good size account for those that are wanting to get into options. But I had to tell you about this because the results are incredible. So we're cranking out premium. Now I'm working really hard. I'm finding a variety of trade setups. I'm nimble. I'm getting in and out of them. But the results are incredible being that nimble. So right now, it looks like we are on track for 100% return, meaning if we can duplicate this type of trading, that we would take that 25,000 and over a year's time trading like this, we would turn it into 50,000, which is super exciting as an options trader. So I wanted to make sure you knew about that. There's only 3 weeks left. That's starting next Monday. So if you can take the time this weekend to go ahead and set up a call so that you can join us. All the ones that have joined so far, they've been super excited and super impressed. So I want you to be a part of it. And now I'm going to let you watch this video that I think will help you even more. Hello, everybody, and welcome to the Trading with Ashley show. Do you like to get something for free or at the very least just get an incredible discount on it? I sure do. So today's video is going to be all about how I secured a leaps on Tesla, not expiring until December of 2027, and I got it almost virtually free. So I'm going to teach you how I did this so that you can replicate it for yourself on your favorite stock when the time is right. This is something called a premium funded leaps strategy. Now, don't let that name intimidate you. Basically, it's pretty simple. What you're doing is you are selling put options on your favorite stock that you want to buy a leaps for, and you're using the premium created because that comes into your account immediately. You're using that premium to then go and purchase your longer dated leaps that should grow in value over time. So when I looked at my plays and I was sorting through them, I could not believe the return. So the trade I'm going to show you has to deal with none other than Tesla. I'm very bullish on Tesla in the longer term, and the timing was right when I actually looked at this. Now, it's not the time right now to go and do this on Tesla because Tesla has been running. I'm going to actually show you what to look for so that if you want to do the same type of trade on Tesla or any other stock, you know what you look for so you have the best opportunity for success with it. Now, when I looked at the return, I was blown away. So effectively, the way I did this was I sold put options and I did use margin, and that helped me not have to use near the amount of cash that you would typically have to use. I'm going to explain all that and break it down for you. But by selling 4 put options that were shorter dated, it generated enough for me to go and purchase the leaps, and I only had to come out of pocket $1,600. Well, when you put this on an option calculator and you look at the potential future price of the leaps that I purchased, it is a 7,000% return. It really is hard to believe that I could take $1,600 of cash out of pocket and then create almost $115,000 profit. So let's go into the computer and I'm going to teach you this important life skill so that you too can enjoy these kind of returns. First, I want to show you the actual play so that you can visually see how this works. So if you look right here, this is the $200 put. Now, I sold 4 of these, and at the time, I received $25 for each of them per share, okay? So then, if you look down here, this is the $290 call that expires in December of 2027. And for it, I paid $116. So I was able to, by selling 4 puts, I was able to finance the vast majority of this right here. So I was really only responsible for about $16 a share on this purchased call, this leaps call option. Now, I'm sure most of you are thinking, okay, that's great, but you are tying up money, Ashley, for quite some time, and that's a lot of money. I mean, if you consider at $200 a share, then you're looking at $80,000 if you're dealing in cash. But the beauty of this is I'm not. I have margin, and that requires considerable less when you are selling options. And I don't know if you're aware of this, but when you use margin to secure a sold put, you're not charged interest on the margin. You're only charged interest on the margin with most brokers if it's actually assigned to you or you use it to actually buy the shares. So let me show you how much cash would be used for a similar trade today. Now, if you go to a margin calculator, I am in Fidelity and I use their margin calculator. I put in the exact contracts, but they are priced at what today's pricing would be. But from a margin perspective, they are going to be most interested in how much would it cost if you're put the shares. So these are $200 each, and I have the 4 contracts. Well, here's how it works. So if you look right here, I did the calculation. It's only going to require not $80,000 in cash. It's going to require $11,940 in cash for this particular trade. So that's the beauty of using margin. Your money can work a lot harder for you. So this is what I used to secure the trade. Then I took the premium, added a little bit of cash to it, and I went and bought the leaps call option. Now let's go look and see what this leaps call option may be if Tesla continues to rise. Many speculate that by the year 2027, when this particular leaps call option expires, that Tesla might be close to around $1,500 a share, which is very reasonable if you consider their business model with the humanoid robots and, of course, the full self-driving in the robotaxi dynamic. So it might be a little bit difficult to see, but I'll zoom in right here. Looking at May 2027, you can see right here, if it does hit $1,550 a share, then we are looking at $115,000 in profit that $1,600 yielded. Now, if you want to replicate this for yourself, the timing is everything. So obviously Tesla was trading much lower when I made those particular trades. So if you're going to try to mimic this for yourself, either with Tesla or another stock, let's take a look at the technicals so that you can have a better understanding of when you might want to enter a trade like this. Right now, I'm on a 3-month chart. I like looking at a 3-month chart, and I'm in Yahoo Finance, and I've got the Bollinger Band populated along with the RSI. And so obviously right now, this is not the time to deploy a strategy like this. We are over 70 on the RSI with Tesla, which means it will more than likely retreat in the coming days, and we're actually out of the Bollinger Band at this point. And this is a 3-month band, so it's not too restrictive. So what you want to do is, if you're wanting to consider this, and we do have another market pullback, or you have a different stock that meets the criteria I'm about to go over with you, that would be the time to enter a trade like this. And so the best opportunity on a quality company is when it's trading at the bottom of its Bollinger Band. And this RSI right here, when it is closer to 30, meaning that at that point it's oversold. Because everything is going to be less expensive at this point. Well, a couple of things. So you'll have a less expensive leaps that you're purchasing at this point. And because you're selling puts, you're going to get more money when the stock is pulling down like this. And you can sell a put that's a little bit closer to the money so that you can actually produce the premium that you're going to use to go and buy the leaps call option. Finally, let's go to the option chain. So when the time is right, you know what to look for. So this is the leaps, and I actually am going out as far as I can on the chain, looking at 12/17 of 2027. So assuming that everything is right with the technicals, what you want to look for is you want to go to the left. That is where the calls exist, and we're going to be purchasing the call. So you're going to be dealing with this side over here. Now, when you purchase a call, you're going to want to pay attention to your deltas, and you ideally want to look at a delta anywhere between 0.7 and 0.8. That seems to be the sweet spot. Obviously, the lower you go right here on the pricing, the higher the delta. It's going to be more expensive, but it will react more positively to upward movement. So if you want to go with something maybe around right here, this $300 mark. It's nice, clean, even numbers, and you do start to have a critical mass that like to purchase these leaps at these even numbers right here. So let's say it was at the bottom of the Bollinger Band, it was trading at a good point, and you decided to buy this. At this point, it would cost you $161. But if Tesla is trading much lower, then it's going to be a lot less expensive for you. And that's when I deployed the strategy for myself. Now, this is still cheaper than buying the shares outright, even with Tesla running, because you can see right here, this is $300. If you wanted to buy 100 shares of Tesla at the $300 mark, let's say you put in a limit order, then you're going to need $30,000 to do that. But look, you can get away with half price right here at the $300 strike price, meaning you are purchasing this leaps and it will mimic the movement of the stock. The delta right here gives you a little bit of insight into how much it'll move with every dollar movement. So it will move 77 cents a share, so $77 per 100 shares for every dollar that Tesla rises. Now, your deltas do change over time as the stock movement changes, but this gives you an initial look at it so that you can get a better idea. Now, if you're going to do a leaps call option, you want to use good risk management. So my favorite thing to do with leaps is I like to calculate the opposite order. And let's say I went ahead and executed this at $161 and my risk tolerance was 20%, meaning I would not want to lose more than 20% before I got rid of the leaps. So the way I would figure this out is I would take what I paid for the trade. So let's just say 162 to make it easy. And then I would multiply that by 80% if I'm only willing to risk a 20% loss. So that comes out to about 129.60. So what I would do in this situation is I would do the opposite order to sell it if it got down to 129.60, and I would make that order good till canceled, and I would put it as a stop limit order. And here's what it would look like on an order ticket when you are putting on your stop loss. So here it is, the $300 call expiring 12/27, and you would do sell to close at this point because you bought it to open, so now you would sell to close. You select stop limit right here, and then I had calculated 129.60, so I might go ahead and just put in 130 on the stop limit order. And then, this is important, you make it good till canceled so that it stays active beyond the first day that you put it on. And then you just let it sit out there, and then if Tesla starts retreating and this leaps starts losing value, you won't lose more than the difference between what you paid for it and 130. And then you can take that cash and redeploy it. Once Tesla has found a bottom, you can redeploy it and use it for a better play, a better strike price. Let's do a quick recap over everything that happened so you have a clear understanding of what I did, because I know I've gone over a lot with you today. First of all, I was very bullish on Tesla's long-term trajectory, and this made it a perfect candidate for what I wanted to do. That, coupled with the fact that Tesla was trading at some key technical levels that I knew I was getting a great deal based on the technicals that I went over. So the next thing I did was I used margin in my account. By the way, if you're ever using margin, I personally only like to use about 30% what's available to me, and that helps insulate me from the dreaded margin call. But what I did, I took my available margin and I sold 4 Tesla put options, and these sold put options created premium for me. In fact, it was enough premium to compensate me about $10,000 worth of premium. So the leaps that I wanted to purchase that does not expire until December of 2027, it was $11,600. Well, I had created $10,000 in premium, so all I had to do was take another $1,600 and add it to that $10,000 in premium, and that gave me the capital I needed to purchase this leaps. Well, as you saw, it's already in significant value, but if Tesla is at about $1,500 a share by the time that it's getting a little bit closer to expiration, then I would have effectively taken $1,600 out of pocket, because remember, I added it to the premium created, and that would yield me $115,000 in profit. It's an amazing trade. If it works out perfectly like that, I will definitely do a follow-up video. And I do have some risk management things in place so that even if I get stopped out of this trade early, I still have not lost money because it's already in significant profit. Now, if you liked this, I did a very similar video on Robinhood a while back, and it shows you how to do it. So if you wanted a little bit of extra practice and you like Robinhood, I'm going to leave that video for you right here. Remember, if you're with me, Trading with Ashley, there is no trader left behind.